Monday, May 24th, 2021, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at when is the right time to sell or exchange your gold and silver for whatever you want, be it stocks, be it real estate, be it a present, I don't know, be fiat currency if you want to hold on to that, or a new digital dollar, whatever. And notice that I didn't say at what price. I said when, and I think that's what is important. I get a lot of questions. At what level should I sell my gold or silver? You know, what was it, 2,000, 2,100 or $50 silver? And I always tell people, this is not a trade. This is saving. Gold and silver are savings. Of course, you might want to trade paper gold and paper silver, but that's a completely different story. And I've done that myself. But that's because I was in the markets. I was a futures and options broker. It was my profession. I knew what I was doing, and it needs to be done 24 hours. It's like a business, so it's not a good way to earn a living trading and speculating, unless that's what you're going to make your profession. And out of those that out of 100 that try that, very few succeed. There are some rare exceptions, of course, but unfortunately the way the world has gone, with so much easy currency being created, so much inflation, there's so much speculation. They've destroyed well-paying jobs in the West. They've destroyed the economy, of course, in the last almost 16 months now, with this crisis that they've had. And people have to resort to speculation, to gambling. But I think gold and silver are still a way to save your excess production, whatever that may be. And I think the most important thing for me about gold and silver is that they're like a key. They let you open doors when necessary, of course. And everyone's different. You could, for example, have given someone a baby that was born, let's say, in 2001, and a grandparent could have given that child $10,000, and if you converted that, let's say, into gold at that time, around $300, let's say, you would have gotten 33 ounces of gold, roughly. So let's say in a couple of years' time, that child becomes an adult or turns 21, which is an important age. And you tell that adult now that you've got 33 ounces of gold, and that you can have that if you need to start a new life, if you need to buy a home, if you want to move to another place to look for a job or start renting, then you can do that, because that gold, for example, now would be worth around $62,000. So from $10,000 back in 2001, $62,000 now. It's probably going to be even more in 2023. Yes, I'm not saying people have to hold gold forever as insurance. It depends on the circumstance. So yeah, in that example there, the young person might decide actually to hold on to the gold, might decide that they don't really need to put that capital to work, that they've gotten a job, they're earning enough fiat to keep going. There's that as well. There's loads of different circumstances. So in terms of the general picture of value, I think one of the best things to look at is the Dow Gold ratio. And I've spoken about this many times. I think the real free market reset of value from paper to tangible goods, and especially gold and silver, will happen when the Dow gold ratio reaches 1, and it might even be less than 1. You might even be getting more than a Dow for an ounce of gold. And why is that? Well, because historically that's what's happened. That's the other thing. History tells us a lot of lessons, right? And this chart here is 200 years of the Dow gold ratio. So that's how many ounces of gold you need to buy a basket of the Dow and Dow Jones Industrial Index. And yeah, you can see that during the fiat currency era or the Federal Reserve era after 1913, the fluctuations are getting wilder and wilder because the Federal Reserve is an inflation machine and it creates huge bubbles. It perpetuates them for even longer. It's been able to do it even more in an accentuated way since 1971 when the link between the dollar and gold was severed by Richard Nixon. But as you can see here, back in the 30s, that ratio went down to around 2, and it would have been the best time to buy stocks. Of course, it took a long time for stocks to be overvalued again. The high there was in 1966, but you would have done well if you bought it. I think it was around 1933, 34. That was the best time to get into the stock market in the long term. Short term, it's a different story, of course. And then from 66 to 1980, it was a bad place to be relative to real assets. As that ratio dropped almost to 1 there in January of 1980, I think the Dow was around 800, gold got up to, or above 800, gold got up to around 887. And that ratio almost got down to 1. So that would have been a great time to get out of precious metals, some of it, not all. Some people like to have savings and gold and silver and go into the stock market. And a lot of people think we are in a great bull market right now. All-time highs in the Dow, S&P, and NASDAQ. Yes, it is an all-time high, but under what measure of value? Well, under the fiat currency dollar, the fiat dollar, the confetti dollar, as I like to call it sometimes. So the real top in the Dow, in real money, was back in 99, 2000, and it was around 43, 44. So you needed 44 ounces of gold to buy a Dow. So that was the best time to get out of paper and go into gold, of course. In 2011, we dropped to around 6. It has been rising, the Dow gold ratio. Stocks have outperformed since 2011, but they've dropped back. And I think this time around, we could go through 1 on that ratio. As you can see, since the 1930s, the lows have been getting lower. And I think we could go through the buck there, or through 1, so to speak. And when that happens, again, it depends on the individual. You might not need to invest in a business or in something that you don't need. You might just want to keep your capital, your gold. But and again, everyone's different. I might want to do something with it. You might want to do something different, and or invest in your family, your children, or grandchildren, even, or nephews and nieces. They might have some idea that could be of use. As Lynette Zhang said, she looks to, her goal is to really leave her gold and silver to her family, to her children, grandchildren, so they have choices. And that's a good word she used the other day when I interviewed her. It gives you choices. It gives you keys, right, to different doors. That's what it's all about. Fiat keys are not very good. They work for a while and then they break, or the lock changes, right? The central bankers, the governments change the lock and you can't use them. The gold and silver keys are always useful. They never break. Yes, Rarely do they, malfunction. The only thing I can see is that the powers that be might try to take those keys away from you, but that's a different story, of course. So I'm sorry I couldn't give you an answer. Sell your gold at 2,225 or sell your silver at $64 or something like that, because that's not the reason to be in gold and silver, in my opinion. And before I look at the markets this morning, just recommend a book that I've recommended already recently, but I'll do it again for those new viewers, for you to see what the world could turn into. Let's hope it doesn't. But it's called The Mandibles by Lionel Shriver. And it talks a bit about gold, but at the end of the story, you will see what I mean by what I talked about in this video. I'm not going to tell you what it is because you need to read the book. So highly recommend The Mandibles. It says it's what's it say? The U.S. It's 2029. The U.S. national debt has grown so enormous that it can never be repaid. The dollar is in meltdown. A bloodless international currency war will wipe out the savings of millions of American families. So it's about this, the Mandibles. They're a pretty wealthy family for a few generations, and it talks about how they survived this period. So let's see where we are then. It's 8:30 a.m. London time. We've got spot gold, or the paper gold price, up just over $1 at 1882.50. High has been 1887, the low 1879.50. Silver is up 18 cents, 2/3%, at 27.73. High's been 27.77, so we're right near the highs. The low 27.44. The Dow future is up just under 0.5%. The Nasdaq 100 future is up 0.4. S&P 500 is up 0.4%. So the stock market continued to rise. The currencies, sterling up slightly, up 0.1% at 141.62. The euro is up 0.8%, 121.95. Dollars down 0.25% versus the yen at 108.71. The dollar is down 1/8 versus the yuan at 642.82. And the Aussie dollar. Aussie dollar is up slightly at 77.40. Pretty steady there from last week, from what I remember. WTI crude up 1% at 64.30. High grade copper up slightly, up 0.1%, just below 450. And the 10-year yield, fairly steady here, down 1.5 basis points, just below 162. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.